What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwame, Got Mortgages. Happy Monday. Another month and another Fed rate cut. What does this mean to the market? We are going to go over everything when we talk about some of the comments that the Fed made, some of the different expectations as we head into crazy mid of Q4. I mean, we are now seeing interest rates starting to slowly creep up a little bit from where we were at before, and we're going to take a look at all that stuff together and kind of find out interest rates where they have been, right? We went to almost 6.17%, and as you can see here, from when the Fed actually went and cut, guys, we are seeing 2025. You can kind of see the Fed went ahead and cut around this time, and then another bump in the market, which if we go back to August 1st of 2024, I'll try this again, 2024, you could see the Fed went and cut interest rates here, pop, interest rates popped, and then again the Fed went and did it again in November, interest rate popped, and then the Fed did it again in December, interest rate popped, and surely enough, the Fed did it in September, interest rates popped, the Fed once again did it in November, and interest rates popped. What are the reasons why this happens? We're going to go over. So again, Fed, for the important part, right, they cut their federal funds rate 25 basis points from down to 3.75 to 4. You could see here, this is where the target is right now. We are at a 65% likelihood that the Federal Reserve will actually cut their federal funds rate once again in the December meeting by 25 basis points, more than likely bringing it to 350 to 375. But we're at about a 34% likelihood of 375 to 400. And let's be honest, remember, the Fed in this past cut, they kind of cut operating blindly, right? We didn't necessarily see any updated Fed decisions, right? When it came to the BLS report, we obviously did not get that because the government was shut down. So what does that basically mean, right? Obviously, despite the government being shut down, the Fed really had no choice but to go ahead and cut their federal funds rate. But there were certain comments in there that the Fed chair stated that obviously we are not going on what's called a no risk-free path. And that's exactly what Fed chair said, right? No risk-free path of where we're at, right? In September, they cut 25 basis points. October, we cut 25 basis points. And once again, in December, not a foregone conclusion. We are far from it. Those were his specific words. And because the Fed chair said that, what happened? Check this out. Interest rates obviously went and ticked up. And that's kind of where we saw a little bit of that tick up over the last few days. Luckily, a majority of our clients, their interest rates were already locked. They were protected. So they did not go through any of those fluctuations in place. Now, take a look at some pending home sales. You could actually see home sales pretty much flat to what it was month over month. Literally 74.8, 74.8. Down slightly, just a hair under 1% when we take a look at things from a year-to-year perspective. Now, we can see also we are at a 0.2% gain seasonally. I'll tell you guys, on the East Coast, we're out of New Jersey, our home base. Market is still super hot. There are some houses that are starting to sit there, but truly just because they were overpriced or, frankly, just the conditions are not there, right? But again, from a national perspective, we're up 1.5% year over year. 1.6% from July. Again, FHFA actually showing a 2.3% increase on home prices. So again, home prices still higher than last year. Growth has obviously cooled, which is typical, right? We saw teens of growth during COVID, then post-COVID, and currently right in that climate of the market as interest rates continue to fluctuate up and down. We again saw the pending home sales start to dip. You could see here within home prices, to make this bigger for us, we'll see year over year up 1.5%. Obviously, we were on a slight downward trend during the summer. We have obviously reversed course of that. You can see on a year-to-year basis up 2.4, then 1.5. And a lot of the major markets, again, were still up relative to where it was before. Again, this week, I mean, we still know, obviously, that we will probably get delays on the BLS report, job openings and labor turnovers, but we will get the covenant right now. Private payroll is playing a very big role in the economy when we look at ADP, right? Over the last courses of the past few, I want to say 2-3 months, ADP has actually been revised. We've actually been seeing job losses. So that's important for us to take a look at, because if once again, maybe we'll see a little bit of this turn of kind of where we were on a pretty big downward trend since September. We're still relatively going on that downward trend right now. It's great to see rates start to chuck into the six. We just locked the client today in the mid fives. It was 5.75. So good to see that on a 15-year. You'd be surprised the 15 and 30-year are not that far off. I mean, we're talking about 5.8, and then on the 30-year at a 6.2. That inverted curve is not that far away. Only half a basis point to cut off almost 50 points. Not a big difference. So important for us to take a look at that inverted curve if we will continue on that trend, or will interest rates start to obviously balance out? Could we see a little bit of a potential downturn as well? So important if you're a consumer out there right now that you're getting your updated pre-approvals, because again, I do expect more than likely, if we get some employment data this week that again shows on the payroll side when it comes to private payroll with ADP, if it does drop, I think we'll continue being on this downward trend. I mean, again, if we look at the probabilities, you'll kind of see here right now we're at more than likely 65 basis point probability that we will see a rate cut, and then about 55% that we'll see another rate cut heading into that part. So important for us to obviously take a look at some of these things. If we look at things from a historical perspective, obviously if we look at just where we're at with 375 and 400, pretty much relative to some of the aspects of what we're looking to do. So we'll keep an eye out this stuff. Obviously, when we look at the dot plot, obviously we look at how many people dissented, how many people agreed. In the last one, I think it was only one person that dissented from there being a rate cut. So we'll obviously keep an eye on those metrics, try to find out exactly what is going to be the expectation, and hopefully we'll continue seeing interesting. I know I don't want to see a huge cut on rates, I'll be honest. The market is already flooded with home buyers, but I would love to see us stay relatively flat as the market continues, or at least just a clear path where we're heading for that soft landing of what we're looking to hit. So appreciate you guys jumping on. As always, if you guys have any questions, please feel free to visit our website. Make sure you like, comment, check out our YouTube channel. We're just shy of 600 videos. Check us out at gotmortgages.com. Appreciate you guys jumping on, and I'll talk to you guys soon.